Here's a company where Elon Musk, which is Elon Musk's father, is an advisor and is in the space now, which is hot and has always been. In fact, trades also at premium valuations. This is Servotech Renewable that we're going to be talking about today. And don't just go by the fact that Elon Musk is an advisor to the board, but let's try and break the company down as we typically do, right? Bottom up. Look at the 6-month returns. Of course, they've been stellar. But if you look at the 3, 4, 5-year chart, the stock actually hasn't done much, frankly. So from the lows, it's done very well. This was incorporated in 2004, market cap of around 2,300 crore at this point. It operates in the renewable energy and electric mobility solution space, and it's largely promoter held and controlled, largely around 60% promoter ownership. In terms of products, and it's got a large suite of products, and all of those will come on your screen. But while we are at it, and while all of that is playing out, you've got 3 or 4 buckets in which I can put the products. One is, of course, solar and ancillary, infrastructure-related products. Then you've got battery and energy storage. There's direct current fast chargers. There's ultra fast chargers. There's alternating current chargers. So it's in the solar ecosystem. It's also in the charging ecosystem and in the EV ecosystem. Excuse me. Also does batteries. So 3-wheeler batteries as well is something that they've gotten into. Charger power modules, charger control cards, circuit boards and the like. Charging cables also is something they do. They have stabilizers, light emitting diode lights for efficient lighting for homes and streets is something they do. So a little bit of retail also. And oxygen concentrators, which are medical devices for supplying concentrated oxygen. Ultraviolet C devices, which is germicidal lamps for disinfecting air and surfaces. There's installation services as part of all the products that they do. There's maintenance contracts as part of all the products that they do. They also have solar engineering projects. So they do the entire EPC for companies as well. So it's not just the modules or the cells. They're also into the larger EPC projects. There's charging network operations. For example, there's a EV battery, EV fleet that a company is running. The charging infrastructure could well be awarded to Servotech for the purpose. And yeah, I mean, so basically those are the ancillary and the related businesses which within the renewable energy space which Servotech participates in. Let's talk about the revenue mix now, and that will give you a clearer picture on what is currently the focus area of the business. This is Q1 FY27 numbers, by the way. 50% from solar plants and solar panels. That's where a large bulk, in fact 76% is both of those. Bulk of the revenue really comes from there. Then there's solar inverters, which contribute another 19%, taking the total to 95% in terms of revenue contribution. Power and EV chargers, very small at this point of time, just 5%. And this is based on, again, Q1 FY27. We'll try and see whether the mix is going to shift materially going forward. But broadly, that gives you the texture of the revenue. Now, let me talk about the business model and how this plays out. They manufacture solar and charging and battery products in their Haryana factory. They sell through tenders, institutional orders, distributors, retailers, and the like. And they earn, obviously, from product sales, projects and services, and, of course, maintenance contracts. We spoke about some of the products and services that they do. They use backward integration to make key components internally itself, but some of the components are also imported, which could be a risk. And that's basically how to look at the business itself. The model, well, products are distributed via distributors, and that gives them quick cash flow, and therefore the working capital is low when this is done. Government projects where build, install, then there's obviously milestone payments involved, and that takes some bit of time in terms of translating to cash flow. Then there's chargers where there's a tender supply plus installation kind of a contract, and then there's charge point operators where every time you go to charge, there is an amount that you have to pay depending on what you're charging. So that's broadly some of the revenue generators for the company. In terms of presence, well, they've got sales touch points, branches, dealers, and the like, around 600 distributors across metros and mini metros. They've got 6,000 retailers in 370 plus towns. This is based on FY26 data. Geography, largely India. Last 2 to 3 years, 90% plus of the sales is India. Exports is less than 10%. So that's broadly the understanding. In terms of the financials, and let's try and understand those. The revenue growth has been extremely strong, obviously of a very low base. So the growth has been 34% last year to FY25 to last year. It's been flattish, but you look at the growth otherwise, 34% growth over the last 3 years in terms of CAGR. EBITDA has grown at 52%, so some bit of operating efficiency coming in, especially in FY26 that we've seen, and that's played out on the numbers. Profit is up 43% CAGR, so very impressive in terms of the growth numbers, but of course, trades at, you're sitting at 32 crore rupees in terms of FY26 PAT. This one trades at 2,300 crore in terms of market cap. That kind of signals where we are at. So while the growth is extremely strong, how long can it last? What are the levers available? And let's look at margins as well. Obviously, order book is important to some extent, gives you visibility of revenue growth. But when you're looking at margins, margins have improved consistently. So over the last, of course, this is Q1 FY27 snapshot. Let's look at that for just a minute. If we can pull that number back, Q1 FY27. There you go. So you have those numbers in front of you. Revenue is around 216 crore. The growth is 58% YOY. EBITDA is doubled on a YOY basis of a very, very low base. Margins coming in at 9%, getting better on a YOY basis. QOQ, of course, seasonality. And then there's profit, which is up 60%. But net profit at the end of it is 8 crore rupees. So that's the Q1 number, of course. Now, let me look at margins. And on the margin front, of course, you have to ignore Q1 FY27. By the way, that's Q1 FY27. But if you ignore that for the moment, you'll see margins have gotten better last few years, last 3 to 4 years. And there's been a continuous uptrend in terms of margins. So that's a positive. Margins for Q1 FY27 also not all that bad, around 9.5% in terms of margins. Let's look at the balance sheet now. And of course, when you've got that very sharp growth coming in, you've got a balance sheet which has to be strong to support that. 300 crore in terms of book value, trades at around 2,300 crore. I mean, 7 times book is what this one trades at. You look at debt, and there is some bit of debt because they do a lot of capex, and therefore there's around 210 crore of borrowing which sits on the balance sheet, excluding these liabilities, of course. And cash and bank balance of around 71 crore is what they sit on. Now let's look at the cash flow metrics, and that also hasn't really translated well for them. So because of the very strong growth, there's some money which sits in receivables, there's some money which sits in inventory, and as a result of that, that translation to cash flow from EBITDA to cash flow from operations not really happening. And that is what is reflecting on cash flow. That's why we're cautious. Let's look at the return ratios, and return ratios have been quite volatile in that sense. We've seen 12% in FY22, jumped, fell, That's how it is. Broadly what we're seeing, and by the way, we're neutral on this. It's not a thumbs up. We're neutral on this. But that's because consistency, one, is lacking. Second, 15% plus is typically what we expect from Indian companies. And that's not played out exactly in terms of the case for Servotech. Of course, they are investing in newer technology. They're investing in newer domains within that renewable energy space. So I give all of that to them. But that ROCE number not really stable and not really climbing above 15. Those are the two observations from this. Shareholding, 59% shareholding by promoters. So that's obviously a positive. Then there's no FI interest for the moment, and balance is held by the public, 41%. When you're looking at the shareholders, the number of shareholders, there's not been too much movement or chopper churn on that number, so we've not put that out. In terms of valuations, trades at 68 times, trailing 12 months currently. The 5-year average is 155 times, so clearly cheaper than the 5-year average, but the 5-year range is 27 to 403 times, right? Despite that, we still feel that obviously at 68 times, valuations are elevated. We'll have to wait and watch as to how execution plays out, and hence we've given it that neutral rating that sits on top. Broadly, that's how we're set up, where Servotech Renewable is concerned. Let me start off. Let me bring on board Prem Prakash, who's the Chief Operating Officer at Servotech Renewable, joining us this morning. Great having you, Prem. Let me first start
Hi.
off by understanding from you, ALMM 2 extended till December, ALMM 3 also, I mean, there's now clarity, 1st June 2028. I don't believe ALMM 3 impacts you materially, correct me if I'm wrong, but of course you're part of the ecosystem and therefore you'll have a view as to what this means. Give us a sense.
See, so we had a very good start with Q1. It actually reflects the strong start through the execution which we have done. The way we are scaling up in terms of our manufacturing capabilities, the way we are scaling up in terms of meeting market demand is something which is, I mean, we have been very consistently doing this. Use of technology, investment in, bringing in completely newer products in the market is something which has helped us. I mean, in our view, we have been very consistent if you really compare our Q1 results this year versus last year. Of course, the growth figures are something which depends on what, the last quarter, last financial year, first quarter, we had certain subsidiaries playing a role, and they were at an entry or early stage. Now they have been, adding a lot of value, and we feel that, they would continue the growth trajectory out here. Having said so, what we are looking at in future is that, the demand for EV chargers, solar plants, and battery energy system is consistently rising. More so because of the favorable policy which has been brought in of late, and we are banking on it. We have been on the front seat while meeting the demands of the PM e-grid yojanas and the solar yojanas which we have in India. And Servotech is poised to focus on gaining through all three segments which we deal in, namely the solar, EV chargers, and now the new kid on the block is battery energy storage system, which we have developed newly in our kitty, and we are very hopeful that we would be actually leading this chart of all these product categories.
No, Prem, point taken. Sorry, I will ask you on results. I will ask you on innovation. Yeah. Both of those are important points to discuss. I'm trying to understand what you make of the ALMM policy which has come out. What does it mean for the ecosystem, whether the ecosystem is ready, prepared, and whether it's implementable with the kind of timelines that we have?
See, the policy is great. The ecosystem is ready as well, is what we feel. I mean, when we interact with the industry, when we see ourselves, when we look back in terms of what we were, 2 years ago and where we are today, let me say that the ecosystem is ready. The question would be how smartly and how fast we are going to implement all these policies. I mean, when you implement these policies, India has always in the past 2-3 years, we have delivered, what is required based on the kind of policy was there at that point in time. We are very hopeful. The kind of, inquiries we are getting from both, public and private sector, including the retail sector. We have already started getting inquiries from people and all. We are very hopeful that we would be able to meet this demand and we would be aligned with this policy. So of course, that is showing us, a positive picture in future.
Understood. With regard to your top line for Q1, the 216 crore that you've clocked, it's largely status quo in terms of the Q4 numbers of FY26 that you clocked.
Yeah.
You're on full capacity is my understanding, right? So no more ramp up required, but new products will add to the top line. At least that's how one looks at it from FY27 in terms of the picture.
No, I would not say that we are on full capacity. We are certainly ramping up. If you see month-on-month pictures, you would find that we are, every month we are ramping up. We were not that strong as an organization in the retail sector earlier. Now, if you may find us to be on the top of the chart from retail sector as well. So on solar front, every day, every week, we are ramping up our both from the production and manufacturing side, and on the execution and implementation side, we are still on the growth trajectory, and the numbers, we believe should be consistent and towards north. We should be growing on that. Coming to the EV charger front, we have delivered very good results in the past in terms of numbers. This is driven largely by the policy matters. Now that the policies are very conducive, we feel that 2027 would really be happy year for the EV charging industry, and we would be no exception in terms of riding on that growth chart.
Right. Okay. So I'll take a bit of a step back, therefore. What's your current capacity utilization and how quickly do you ramp up? Because the guidance was that you'll do 100% at the end of FY27. And if you are ramping up week after week, revenue trajectory on a QOQ basis being flat, could you give us some perspective on that?
No, Harsh. As per our forecast goes, our revenue expectation would not be flat. You would see the growth pictures the way we have been growing. I mean, of course, as you pointed out, Q4 and Q1 numbers look very similar, but this was a stage where we were really building our capacity and be getting ourselves ready for the next trajectory. So quarter to quarter basis, you will be finding a growth numbers on all three segments, especially the new products, as you rightly said, the new products, which is the lithium-ion batteries and battery storage system, which we have recently added to our kitty, is going to be driving the overall growth numbers for us. Because of course, with no base, we have arrived to a particular stage, and there is no looking back. We are going to grow from here. So solar is going to be our focus area, the way we have been doing for the past few quarters. EV charger is something which we are going to go very aggressive on this, based on the kind of policy which has come up, of late from various states and central government. And battery energy storage system and also lithium-ion battery is something wherein there is a humongous opportunity for all the players in the market, and we have cracked the code, and from here we are going to grow. So all these three segments are going to show you a growth numbers quarter to quarter.
What quarter does lithium-ion and battery energy storage solutions and some of the other newer products that you've innovated, when does that start to reflect on top line? Can you give us a perspective of that?
It has already started showing up some numbers, but it is not that considerable where you can see in on top line. But then from this quarter onwards, we would be able to at least identify that they are making considerable contribution to our top line. And we are going aggressive. Our state-of-the-art manufacturing facilities all set has already delivered results in the past quarter, specifically in last 2 months. And you would see the results in top line from all these three segments, especially the newer products which has come on the block.
And on the solar front, if you can give us your capacity utilization, current and by end of FY27, where do you take it to?
You must be knowing we actually deal with two market segments. The B2G is something wherein the capacity is in public domain and it's there. But currently we are operating at 60 to 70% capacity utilization, which we are ramping up. Last 2 months, our solar number has gone up both. And specifically when we talk about the retail sector, we have more than 6,000 retail customers coming in. We have more than 400, 500 distributors, 500 to 600, 600 distributors which we have. And every month the numbers are growing by 15 to 20% in terms of increasing our footprint. We are present in almost all the states in India where the demands are rising. Last 2 months we have seen a great demand coming in from the eastern part of the country. So in terms of capacity utilization, one side we are ramping up our manufacturing. We are setting up new manufacturing spaces. We have signed a deal with a few of the government organizations where we are going to invest. We have already committed a 400 crore investments coming in to ramp up our manufacturing facility. So that's it. That is one side of the story. The other side of the story is that every month we are raising it. So far we have used 70 to 80% of our capacity. Now we are adding more capacity to our manufacturing, especially on solar and the battery segment. And probably you will see the results in next quarter.
Okay, noted. And therefore, that ramp up from 60 to 100 or 65 to 100, if I can call it that, will that reflect on top line, or are retail revenues or realizations different from B2B and therefore may not fully translate to top line?
It may not fully translate to top line. I mean, you are absolutely right. However, that is a segment which we have very aggressively started focusing on, because there is a great demand. I mean, in one particular state, you have got like a state like UP, just for the sake of citing an example, a state like UP requires 3 crore of rooftop solarization right away as we speak. Now, there are a lot of opportunities out there. Retail is something which nobody can overlook. We have been focusing, and we have been no exception in that. B2G is something which goes, as per the policy, as per the tender which are floated out there. So it would certainly reflect on the top line. You would be able to identify it on top line, but the considerable difference out there would be made by the new kid on the block, the battery segment, the battery energy storage segment. And of course, this year is going to be an EV chargers year based on the kind of policy which have been floated. And you will find, we have been on the forefront of meeting all those demands.
Excellent. So now give us a breakup. What's the top line guidance or target for this year, FY27? How much of that comes from BESS? How much of it comes from EV charging? How much of it comes from traditional solar?
See, if you look at the last complete financial year results, I mean, 45% of our contribution, 49% of our contribution used to come through solar. Approximately 25 used to come through EV chargers. We never had, BESS and battery adding value in last financial year. It's a recent addition in our kitty. This year, I mean, I don't have a number which I can quote out here, but based on the kind of the demands which we have been seeing for the last couple of months since the policy has been rolled out, we see that EV charger, I mean, it's solar demand or solar contribution in our total kitty should maintain its consistency. So it would certainly maintain its consistency from here because we have been focusing on various sales stream, and we have been successfully doing it. We are increasing our footprints, as I said. On the EV charger front, we are very hopeful this year should be the year of EV chargers, and we are all set. There are certain inquiries, and there are certain projects which are coming up which we have not disclosed in public domain, but we are going to be on the forefront of EV charging business, and those are going to be in good numbers. Coming to the BESS and the lithium-ion batteries, I mean, sky is the limit. We haven't seen any brand or any company really, meeting all its demand. Probably, 10% of the total demand which are there have been met by the competitors out there in the market. And we see that there are a lot of scope. We have figured out certain markets, certain gaps in the market and market in the gap. And that is where we have strategized that we are going to focus on, and probably we'll make a good number in future.
Okay. Prem, give me a medium-term guidance, right? So if not FY27, what's the aspirational growth number that you're looking to clock? Maybe over the next 2 years, 3 years, you pick a number.
Growth number, I don't know whether I should be commenting on growth number, but then last year we closed at 650 odd CR. This year it should not be. I mean, we have been maintaining a growth trajectory of 60-65%. I mean, 80. I mean, certain times we have done 70% growth as well. This year should not be any different. In fact, we should be eyeing on. We are hopeful that we will be eyeing on a larger number. I would reserve my comment on giving you a number out here, but then it should be better than what we have done in the past.
Taken. And Prem, give me a sense of what the revenue mix will look like maybe 2 or 3 years from now. Immediately, I understand that you're reserving the way in which revenue will shape up. But give us a sense in the medium term, how much from solar, how much from some of the other products that you're doing, BESS and EV charging and the like?
So looking at the kind of market which is shaping up for future, I think the BESS and the battery, lithium-ion battery, should contribute not less than 30% to our kitty. Currently, it's negligible. It's not that great number. So this is where we are eyeing on. And EV chargers, I mean, the kind of EV charger demands are coming, the kind of adoption rate we have seen in the past 1 year, we feel that EV charger business, along with the CPO business, which you during our introduction you talked about that particular businesses also have started picking up. We have got our own company-owned stations out there in the market. Should also contribute for approximately 40% of the total revenue, and solar should maintain its consistency with 30 to 40%.
If I take 10% as the margin base, Prem, does margin keep getting better as the years roll by, despite new products that you're getting into, or margins will come off in the years in which new products are introduced, and thereafter again you'll see a bit of a pickup? How should one look at the margin trajectory?
Okay, so Harsh, if you see, I mean, for the last 3 years, we have been noticing we have improved our margins because of smart execution, the way we have started, smartly executing it, backed with. I mean, it's not one-off gains which we are declaring in our quarterly results. It's actually backed with a smart execution. The demand across EV chargers, solars are rising, and so is our capability of improving our margins. So there is no reason why the margin should not improve. We are completely, at this point in time, if you ask me, we are completely focused on scaling manufacturing, investing in complete indigenous technology, and then going ahead and executing our order pipeline smartly. And all of these focus areas are going to directly impact our margins. And of course, we have this on top of our mind.
Okay, 3 questions rolled into one. Prem, last off, working capital requirements, do they go up and therefore cash flow will continue to remain under pressure, or do you become free cash flow positive this year? And third is debt and funding the next capex which is required. How do you look at all these 3 wrapped into one, broadly, cash flow and debt?
Okay, so first thing first, this year is going to be a year of investment for us. As I mentioned in my previous answer, we are committed to invest more on ramping up our manufacturing base. So working capital would certainly, so the cash flow would be under pressure, but at the same time, those investments are going to be, creating a midterm and long-term, margins and revenue for us. The second question was in terms of our, I mean, if you can repeat the question?
Receivables and how that is shaping up, and then debt and capex.
Okay, so capex, as I said, I mean, we are going to be investing. So of course, there will be quite considerable investment in capex. Debt is something which is going to be there for a year or so. And because of the high investment and ramping up our capabilities, we are focusing on investment. And of course, then we would be focusing on improving the ratio.
Okay, understood. Okay, Prem, thank you so much for coming in, at least for another year. Balance sheet stays as is, no debt going away. And in fact, cash flows will continue to be something which they will have to continue to fund. Thank you so much, Prem, for coming in and speaking to us.
Thank you. Thank you for having me here.
All right, completely timed out on this edition of All About Your Company, viewers. Thank you so much for tuning in.